What is going on, apes? The Ape Army? Get ready for next week. In my personal opinion, and this is never financial advice, I do think we are going to see a major gamma squeeze, and I think it started on Friday with us popping about 16%, even closed the day up about 0.5% in after hours. So I think all the signs are here for a major gamma squeeze. Like I said, I think it did start on Friday. But in this video, we are going to talk about the Ortex data as well as the failure to delivers and how the SEC is covering up for these hedge funds, when I think this data will come out, as well as the technical levels to watch going into next week. So I think you guys are going to like this video. I don't want to waste any more time giving you guys this information, but the only thing that I do ask is that you tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel. And if you want to stay up to date with the moves that I am making and the community is making, sourcing great information and trades, make sure to check out the link down below in the description. It pays for itself over and over and over again, as well as get up to $70 in whatever free stock that you want using the link for public. It is literally free money. It takes about 2 minutes to do, and you get your stock immediately. Now, getting right into it, guys, as we all know, this is T+2 data, so this says Friday's changes. This was really for Thursday, so it is somewhat lagged behind, but we did see 341.52 thousand shares that were additionally sold short. So nothing was too crazy there, but I really want to start off with the whole failure to deliver argument, because if you have not seen these videos I've been doing, I'm pretty much the only one talking about this issue out there, and nobody has yet been able to rectify what is going on as to why they are not reporting this data. But essentially, what has been going on, guys, look no further than the government's SEC website, guys. They consistently report the failure to deliver data for the first half of the month and the second half of the month, but for the reason we all know of, and that is naked short selling, they have not reported data for the second half of May, and now we are almost to the first half of June. Monday's trading will be June 14th, so I do expect this data to come out sometime next week, whether that is Wednesday, Thursday, or Friday. I do expect it to come out. Now, how this plays into the whole gamma squeeze aspect, I do think the SEC, and this is only a wild opinion, right? I do think the SEC is cracking down on these naked short sellers, so they're going to have to start covering their positions, driving the share price up even more. And when we come to Stock O Tracker, this tracks essentially how many contracts are in the money or out the money, and this website does a lot of other things. They track a lot of GameStop and AMC, different variables of what is going on with the stock. But we're going to look at the option data, the calls that are in the money and out the money. As of June 18th, we all know this was a big expiration date at the time when AMC started to squeeze. This was about 2 or 3 weeks out, depending when you did notice the squeeze. So June 18th was a big options day, and we've seen expiration, I should say, we've seen 414,337 options that are currently in the money. That is if AMC did nothing, right? If AMC was the same price, we would have almost 500,000 options in the money. Now, what happens with these options? We all know if we have 100 shares of a stock, we could sell a covered call, right? And it does go a little bit deeper than this, but institutions and hedge funds or market makers, whoever the case is with a lot of liquidity, will actually sell you these calls to make sure that there's liquidity in the options market. Because if you wanted to do this, there is a price that you could get filled on any single options contract. A lot of the time, that is going to be market makers when there is not enough retail or even institutional investors that will fulfill those obligations. And you see that a lot, and you know what I'm talking about if you trade options. But with this case, with so many contracts expiring in the money, a lot of shares are going to have to be purchased, and that is why I do think we started to see that rally into Friday, and we were up about, like I said, about 16%. But out the money calls, this is really what I want to focus in a little bit more, guys. Out the money calls, we could see that June 11th on Friday, a lot of calls expired out the money. That is why we didn't see a significant gamma squeeze. Only 90,000 were in the money, 330,000 were out the money. But June 18th is very different, with, like I said, the 414,000 in the money, but 303 contracts that are out the money. Now, this is only counting contracts that are currently on the option chain. This is not accounting for once AMC does start to see this gamma squeeze and more people start to buy options. But like I said, 303,660 contracts that are out the money. Once we do see all these market makers and institutions actually covering the obligation on these contracts, a big expiration date is actually June 18th, the $40 calls. That has a lot of the contracts that are actually accounting for the June 18th 18th data. So a lot of people are purchasing shares or getting assigned on those contracts for the $40 strike, which does help to signify a higher bottom, right? Because if you had AMC at $5, you watched it run up, you sold a cover call for $40, right? If people are assigning you for those, right? So you're having to sell your shares you bought at $5. Somebody is buying them for $40. They're much less likely to sell out of their shares if AMC doesn't do much or even goes under 40. You're creating a higher bottom here. So I do think next week will be very, very good. But once you see these out the money contracts, the 300,000 start to go in the money, you'll see even more hedging that is going on with institutional investors. Now, throughout the rest of the option chain, it's not very significant until you get to the September 17th. But you'll want to watch the next week, the June 2nd, and I don't think these are going to be big expiration dates anyways, but I'm going to be really watching the July 16th because that is where you see a lot of liquidity that is a decently far range out. It's about 1 month out, and that is what you really want to see because theta starts to decay these options. So once you see a lot of bullish momentum, you should see these July 16th options start to increase heavily in actual options volume and activity. So that is what I'm looking at. That is the main key factor here. I'm going to keep a close watch to the in the money calls and especially the out the money calls that are going into the money. So we have about 700,000 calls currently at the June 18th expiration. If most of these do go in the money, and a lot of them, like I said, are in between the $40 strike and the $100 strikes, a lot of them are actually at the $145 strike, but we could see a lot of gas once we do get over that $60, $65, $70 price target. We could see a lot of movement to the upside. Now guys, taking a look at the technical analysis, something that I absolutely have to point out for you guys is ever since June 8th, when we kind of were consolidating in between this range pretty much the whole time, but when we were at the upper end level of about $60, which we were significantly under that, but we did pop to that in after hours and then we sold off. This was June 8th. Ever since the beginning of June 8th all the way up until June 10th, which was only 2 days, but in the situation and the grand scope of the squeeze, it hasn't been very long and AMC has been holding up very, very well. But we were in a very bearish downtrend, hitting lower lows, and there's 1, 2, 3, 4 touches on this, signifying we are in a bearish downtrend for new lows, lower lows. And we did start a bullish uptrend. It was slight, I mean, at the end of the day, kind of leveling out and then bouncing in after hours, coming back down in the beginning of trading on Friday. But this 15% rally may have started a new bullish trend, and this is not for certain yet, right? But this blue is after hours, and this will be the pre-market hours. If we do see this rally sustain into Monday morning, into pre-market, and into the rest of the day Monday, I do think there will, one, be a lot of naked shorts that are covering. We will see a lot of shorts in general that at least try to cover, right? I don't know if they will actually be able to, because we're going to see this back and forth. Some are going to cover, some are going to start shorting again, and I do think more are going to short than are actually going to cover, but it is not for certain. It does look like to me that we definitely reverse trends. You guys can even see this on the MACD. Look at all these outflows from literally the trend line that I just pointed out. Look at all these consistent outflows over the span of the last 3 days. A little bit of inflows in the beginning of trading June 10th, and then more outflows the rest of the day, and then in after hours and throughout the day on Friday, we've seen a lot of great inflows. So if we do see this pattern start to continue and we start to break these key levels that we have to watch, the first one, the most significant first one that I am watching is this $55 mark. That is kind of where you get up to, you consolidate, and it's pretty hard to break that, like firmly break that and hold that level. We have been coming down under 55, but the next level, the real level that I'm going to be watching is $60. Once we get to 60, I think a lot of naked shorts are going to be freaking out. And the real reason I showed you guys this SEC data is I do think the SEC is cracking down on a lot of these naked shorting, and they can see what is going on with the naked shorting, right? Because with the T+2 settlement, a lot of naked shorting does go on within those 2 days, because you can get in and out before the brokerage has to actually report this data back to the government officials, right? The government entities. So you can get in and out of these naked short selling, and that is borrowing shares with, well, not borrowing shares, just shorting a stock without actually borrowing shares. And I do think the SEC will be cracking down on these, and especially once you do get over this $60 price, which is about $10.50 away from where we currently are at $49.40, we will see a lot of shares actually being returned. Like I said, a lot of shorts will actually continue to short the position, but we did break out past this little resistance line we did have at about $47. It was slight. We've only been under this for a brief period, actually hitting $39.71, and this was on Thursday, June 10th. But we did break out of that, and we are riding this trend line. So like I said, if we do break out of the 55, riding this trend line, that'll be very, very good, and you'll see a little bit of a squeeze in this, right? You should either break out past this, break out to about $55 is what I would expect to happen, honestly. When you do draw this trend line and you see the resistance level at 55, it looks like we will probably break out above this. And considering how many contracts are in the money for this upcoming week and how many are out the money, like I said, just to reiterate, I want to watch what is out the money. In the money is very important, but you want to watch how many of those contracts go in the money, because a lot of people, like we seen during the last squeeze, bought $20 calls. Those went well into the money, and the market makers, institutions have to keep hedging those options. So that is a big driving factor that I am going to be looking at, and that's pretty much all for the technicals. That is the bullish side of them. It does look like we reverse trends from very bearish, like I pointed out in the trend line, up to a very, very bullish trend line going into the future. And if we do get above $77, that is really where we will go crazy, and you'll see a lot of margin calls coming in. And overall, I do think there's a lot of margin calls coming in. As you can see, with pretty much every other day, you're hearing about an institution that lost 10, 20%, 30% in some cases. So that does look good. Something else I do want to point out for you guys, and I hope a lot of you guys stay to the end of this video, is with the upcoming shareholder vote. This could be a very negative catalyst for AMC, but it could also be a very positive for AMC. But as we all do know, before you guys call me FUD or anything like that, this is just trying to keep you guys informed, and you have the say-so in this because we are the majority owners. And I do believe this actual vote and meeting is going to be done on July 29th, and they are asking for the 25 million additional shares. And what happens here if we have 501 million shares and they issue 25 million more shares, even though it's next year, the investors know, or the market makers that actually dictate the price, because we know there's a lot of fraud that goes on. This will add a huge downward pressure because investors already know there's going to be dilution, and it's just like having a Mountain Dew and pouring water in it. You don't want to do that. You don't want to add more shares when you absolutely don't have to. That is why we've seen that major sell-off when they actually did the deal with Murdoch Capital for 8.5 million shares. We've seen the sell-off when they actually sold 43 million shares. So we've seen two examples of this within the past couple of weeks. So I do personally think this will be a negative catalyst to the downside. I don't see how this could be a positive, since they are getting S&P upgrades because they're in a more sustainable path to profitability. Yet again, it's not like they absolutely need the cash. So that is just my opinion on this. You guys have the say so in this if this actually does go through or not. I think for the whole short squeeze and the movement, it will be another bearish catalyst onto the whole thing. I don't really think there will be too much of an actual, I mean, it could be very good if we did vote to not do this. We'll probably see a pop on that. But if we do vote to do this, even though it is in about 6 months before they could issue these shares, investors know dilution is coming. So does the market makers. Now, essentially how that works as well, I just want to point this out for you guys. Let's say a company kind of like Sundial, right? That say they have 1 billion shares outstanding. They have a $1 billion market cap. So their shares are $1. If they add let's say 100% more, right? They add another billion shares, the stock price would go to 50 cents because the market cap doesn't move up, but they added more shares. So you divide that by 2 and you come to 50 cents. So your equity in the company becomes smaller. I know in the case of AMC and 25 million shares, it's not that big of a deal. It's maybe like 2% or something, 2-3%, but nevertheless, it still creates that downward pressure. And for the movement, I don't think it's a very good thing. saying to be doing, especially when they don't need the money as of right now. If they need the money in the next, couple months, they could always ask for more shares. So that's not really an issue. This is just a negative catalyst that I could see on the near-term horizon. Let me know what you guys think down below in the comment section. That is pretty much going to wrap up this video. My price prediction by the end of this week is $65 to $85. If we go higher than that, that's great. If we're under that, I think there's definitely something going on behind the surface here, because apes are holding their shares. Apes are strong. That is the fact here, and we do own the company. So that is going to wrap up this video. Make sure you guys get your free stock using the link for public down below, as well as if you want to stay up to date with the moves that I'm making and the community is making, check out the link down below in the description, as well as get up to $2,300. It's $2,300 now in not whatever free stock you want, but in a free stock using the link for Webull. If you don't have that platform, I absolutely love it. So with that being said, I'll see you guys later. Take care.